We'll do it live.
Okay. No.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.
Yeah.
All right, welcome back, everyone. Hope everyone's having a great day. Today we're going to be going over some of the topics here and kind of discussing, I hope that this hiatus that I've had is going to fizzle out and I get to come back and do some videos for you guys as well as some live streams. I really do enjoy the live streams. The live streams are really fun. I love the chaotic nature of the content because we just kind of go at it. We kind of hang out, see what's up, and you guys almost feed me the content itself. And it's very, the opposite of pre-planned. Although I do like to have some themes that we discuss already planned out. So it's no secret to the community members that this year has been rather insane. So we piggybacked off of 2022, great year in the portfolio, and then 2023 rolls along and it just blows up the portfolio. I know I haven't done a public YouTube portfolio update, but for those of you who are in the Capital Mindset Gold membership, you guys see the portfolio updates that we do. And we'll discuss a little bit about that here because I guess I don't have like a presentation for anyone, but I'll still kind of feed off of some of the information. So for those of you who've seen the last update, this is older information. This is for those of you who are either newer to the community, haven't seen any of this before. And of course, you guys can ask questions. That's what this is for. Questions, asking them live, and then I can respond to them live, etc. So let's get right into it. So kind of a rehash of, I actually do want to do an update. I guess I'll do it publicly. But for those of you in the membership, I have decided to change one of the rules regarding the portfolio, and that being its monthly contribution. I'm not decreasing, I'm actually going to increase it because I previously had it set to a fixed amount. And in light of recent events, I decided to increase the contributions to that portfolio. So just don't be surprised when you start to see that. I probably should have saved that for the Sunday call, but I just thought I'd give it now. We'll see. Probably was a better announcement for a Sunday call. So anyways, we're going to discuss, of course, what's going on with the main positions within the portfolio. So if you guys don't know or aren't familiar, I have the holding company portfolio that the gold members get access to, and they see the full dollar amounts and everything. And it follows basically the exact same strategy as my holistic portfolio, which is under my own personal name, etc. So there's not really much of a change from strategy. It's just missing all the legacy positions that I've accumulated over my investing career. It has only positions that I bought in the last, since late 2021 or so, when that portfolio was started, basically as old as this YouTube channel. So really more recently, what has overtaken the portfolio entirely has been Meta. I think that's no secret. And when we went extremely heavy into Meta late 2022, hindsight, it was a good decision. And it's also been, I guess, dominated by, I think second place is now Netflix. I think Netflix has overtaken Google, even though Google has performed a little bit better in the past couple of weeks, and then Amazon as well. So I am pretty tech heavy, but a lot of my recent buys have been focused more so on towards the next slew of opportunities, which there aren't really that many. And that's actually one of the parts of the title today. I'll get into that, which is why investing should be boring. And I think that it's almost antithetical to YouTube Finance, or what YouTube Finance rewards. So you're rewarded for constantly bringing up entertaining topics, and there's constant change. And I feel like, well, for one, that's not healthy to you guys, and it's also not healthy to the investor. I know that I like to joke around about this, but for a second, we have to just imagine a YouTube content or finance content creator that actually wants to make money from their investments, and their investments are more material than their entertainment value. But if you go around YouTube Finance, you'll find that, you know, there's barely any of them, if not any at all, and they're all here to entertain you. And that's how they make their money, and they're there to sell you a course or something like that along those lines. And very few and far between are they having to rely on their investment prowess to fuel their actual income. So that actually skews the content to be more so towards entertainment. And if you kind of view them as, well, I think, I'm not going to name any names, but maybe some of you will guess who I'm talking about. I view there's like separate categories in YouTube finance. So there's the ones that are harmful information, and then there's a lot that are empty information. What I mean by that, or what's a distinction, is the harmful information types, they're giving you wrong information, and you're better off not watching them, or believing in them at least, because you might watch them for, I guess, cringe value. You know they're wrong and you watch them anyways. So like kind of like a hate watch relationship, which I don't think is that healthy, but whatever your choice. And then the other part of YouTube finance is not as harmful, but it's more just so, or like towards like the empty value. Now, again, you might feel like I fit that category. Okay, that's fair enough. That's an opinion. And maybe I do. But I think that that's another kind of area of YouTube finance, maybe I think now more than before, more prevalent, because I do feel like there's a lot of creators out there that kind of just repeat very basic information. They just maybe read off of a website, and that's really all they do. They're just regurgitating other information. It's not really any substance. But that being said, it does, I guess, fuel content, and content fuel is good for their channels, and then therefore good for their pocketbooks, which might end up helping them, invest, etc. So, all right, let's see if there's any questions before I begin on the first topic, which is where I've been. Okay, so lots of types of names have good values. They've ran. Yeah, I know. And we're seeing the poll come in. So let me see how we're doing with the poll. We have 28 votes. I'll let it go for a little bit longer. And let's see here. Let me click out of this poll. Fabio's here. Oh, okay, that was a question about a joke question. Okay, so where have I been? Well, I've been pretty busy. And if anything, I'm going to get slightly busier in, well, it's going to change. The nature of my busyness is going to change in the next couple months or the next half of this year. For those of you in the community, you guys know what opportunity has presented itself to me. One that I don't think I'll be able to, well, pass up whatsoever. But in that being said, I think that the newer chapter is actually going to provide me with a lot more leniency in terms of time, in terms of deciding when I need to do things or how I need to do things, which is really good, besides the monetary benefit, okay? And that presents itself opportunities to do more live streams like this, because I enjoy, again, the live streams more so than the videos. Nothing is scripted. I don't script a single piece of content. I don't come here in front of the camera with any script in mind. I just speak, and you guys almost feed the content. And even with the video, I just speak. I think of a stock that we're going to discuss. I've probably already done some due diligence off camera, and then I basically repeat that information on camera. It helps me a lot as well in terms of kind of penciling out things in my own mind if it's an opportunity I like. I also want to kind of get into the investments, or wrap up the investment talk on Meta, Amazon, Netflix, and all of those, Amazon being the largest purchase we've made this year by dollar amount. I think that one's still playing out. That thesis is still playing out, but I'm content with its size. I'm not really going to look to accumulate any more Amazon. I think that, again, people are going to wake up, and if you haven't watched my Amazon content or been in part of the discussions I've had with community members about Amazon, the opportunity that was Amazon, especially at the $80 range, well, that one is more so about people kind of forgetting that Amazon has like a cash flow spigot, and it can just decide when it wants to produce tons of cash flows. The same thesis occurred with Salesforce. So we've done pretty well on Salesforce, and Salesforce was almost telling you as an investor, hey, we're more than capable of producing tons of cash when we really want to. It's just we just decided we're going to focus on profitability now. And I think that the investor base right now is becoming a bit too exuberant on tech. I'm not saying that you're going to lose money buying tech here or anything like that, but I think retail is showing its classical behavior of chasing returns. And that's unfortunate, because I think even now, I think some of you have been sending me content creators who are negative on certain asset classes, particularly I think real estate, and might be switching over to more positive. I think retail is going to switch to a more positive light on real estate in the coming quarters as it begins to perform. And you guys know from previous live streams early this year, my opinion or statement was 2023 was a year to accumulate real estate investment trusts. And I think most REITs have already rallied 20-something% from the lows. The one REIT that hasn't performed all that well still, which I think actually I just checked, I think all in all after averaging in, I'm above on all of them, and I think I'm barely up on, no, actually the one I'm just barely above on is ADC. Kilroy, I'm actually up a couple basis points on it, or a couple hundred basis points on it. But I believe ADC, that one's only just a couple basis points difference from cost basis. But the Essex of the world, there's one more new one that I just bought, and that one I missed that one on the lows, unfortunately. But anyways, point being, REITs have experienced a little bit of a rally here, and nowhere near as like the rally year to date from big tech names, but things go in cycles, and seems like retail, when things are down, they hate it. When things go up, they love it. And now big tech is loved, and just people love big tech. So if you show people that you bought big tech or talk about big tech in videos, you do well, because that's what's hot right now. So for your folks, USDs being so expensive made me, it made me not go all out when the deals were there except Meta. Now that it has fallen significantly, I'm going harder in. Yeah, hey, as long as you kind of keep it in the game and follow your own path, strategy, and psychology, you're good. You're gonna be good to go. The point of you guys are all the rarity in this world because you guys are focusing on investing. Most people don't focus on actually saving money and investing. So you guys are showing me a couple things. This is why this is a niche at the end of the day. All of you presumably have disposable income. You live below your means, that you have excess savings, and then you're taking excess savings and you're investing it. So each category that I just laid out is less and less and less of the population to where you are, which is someone with good income or lives below their means and has excess savings and is capable of deploying those excess savings into investments. Most people around the world are not in that position or have decided to do that position. Thoughts on Endeavor? I think it's because you've probably seen it in the portfolio, Berlin Gamer. I don't know if you are a member of Capital Mindset Gold or not, but if you are and you're asking about Endeavor, then surprise, yes, it is. So I bought shares of Endeavor. It's a small position. I believe it's just under 5% or so of the holding company portfolio. Across the total, I don't discuss exactly what that percentage would entail across total, but it's not large. So it's kind of just a starter position, getting used to the idea. I've penciled out a valuation that it's more or less at fair value if things don't go well with WWE. If things do go well with WWE, what you're looking at there is a very strong moat around an entertainment business that a lot of the streamers are going to pay top dollar for. So let me explain this in an idea, because I think it's a pretty good stock to discuss. Let me pull up Endeavor. And we're going to discuss that. Let me actually get the software to stream my screen and not just me. All right, cool. So we're streaming this, and let me bring you guys back up, your comments and stuff. Okay, so with Endeavor Group Holdings, you have UFC, which is their most famous asset underneath the company. And they're merging with WWE. So we have the two big fighting entertainment companies merging together. One, of course, is more showmanship, and Endeavor with UFC is actual fighting. Well, we'll get into that. But both of them, all right, dominate their respective space. They have very loyal audiences. And right now, I believe UFC has a contract with ESPN. So once that runs out, we're going to see who bids for those contracts. With UFC and WWE now being under the same banner, they have a lot more leverage when they negotiate with the likes of Netflix, Disney, Amazon, Apple, whoever really wants their content, their fights to show up on their service. So you have that going for it. Now, when I did my analysis, and maybe I will try my best to get through because this is kind of getting into the previous topic of where have I been. It's really a timing issue as far as focusing on the private content that I provide to members and then the public content and then everything else going on in my life. So I want to do stock videos. I want to do more stock videos. I just haven't been able to do so. And so I hope to actually get one out on this one. I have a bunch of them on the list that I really want to get out, like Dollar General. I want to get one out on, well, I already did the Disney one. That one's good. Boom, we got that one out. Did I do the PayPal? I should have done a PayPal update video, which I guess I'll reveal for those of you who don't know because you haven't seen the portfolio update video because I haven't made one, which is another one I have to make, is I actually have an investment in PayPal. Okay. And maybe I should reveal to those who are not, who don't know this. Actually, I'll let the audience members do it because I think that's more fun. Can everyone who knows what is the stock that I bought and made more money on than all of the YouTubers that pump that stock? I'm going to see if everyone guesses it, but that's my hint. I bought a stock that there's a lot of YouTubers that pump it, and I probably made a lot more money on that stock. I think I made like 50 or 60% on the stock in total. Oh yeah, okay. So yeah, definitely people definitely. Well, Baba's one of them, but that's an older one. No, there was a new one, and I wasn't making videos. Otherwise, I would have had a lot of fun making videos about it. Yeah, no, not Mullen. Oh my gosh. But yeah, I see it popping up several times. It was, well, Intel, we've been in and out of Intel. Intel's a story. SoFi. So the company is SoFi. So members saw it in one of the portfolio updates, and they were kind of surprised. They saw SoFi, and they're like, what? Why do you buy SoFi? And the explanation I gave was, yeah, everything I say about SoFi is absolutely true, but it was a sentiment trade, similar to Baba. So when I have plenty of videos talking poorly about Alibaba, and why I don't think Alibaba is a worthwhile investment, there's a lot of risks associated with it. But I think as far as content creators on YouTube go, I have made a lot more money on Alibaba. Well, I've made pretty good money on Alibaba, although it's a small speculative fun position because I do believe those risks are true. We just have fun with it. And the same thing occurred with SoFi. And so the members saw that, I guess, live there. They saw me buy it and we talked about it and they understood the irony / joke, but there was a legitimate reason to make money on SoFi, and that was the student loan moratorium end. So just that sentiment shift, we were able to profit on the stock. I didn't sell at the very top, but again, the joke is I talk poorly about SoFi, and I probably made more gains on that company than all the YouTubers on this platform that talk well about SoFi, or talk good about SoFi, which is ironic, right? It's funny, and that's part of the joke. And same with Alibaba. I made money on Corsair Gaming. Well, good, Catherine. All right, anyways. So Endeavor Group, once they merge with WWE, I do believe that they're going to have a lot more leverage when they go to negotiate with the likes of Disney+, ESPN mainly. That kind of segues into maybe a conversation we need to have about Disney. So Disney's been creeping up, at least in the holding company portfolio. So you guys who have seen the holding company portfolio allocation, you saw that Disney's kind of getting up there. And you're like, well, what's going on with Disney? Well, Disney has a lot of problems. And you guys can go back into the channel. That's the beauty of YouTube. Everything is a video, and you can go back and verify, did I say those things? So go back and check out all my older Disney videos from 2022, 2021, around that era. And yeah, just check out what I said back then when Disney was at much higher levels. Well, there were a lot of issues that Disney had to resolve. And fast forward to my most recent Disney update video, I addressed how they addressed a lot of those issues. At least they identified them, which tells me management's thinking about it. And that's all I could ask for right now. Now, Disney is looking for a sale of its strategic assets, and that's really what's, okay, let me see if one of these stories comes up, because then I can just pull it up, but never mind. But these recent stories are coming out about how Disney's having lower park turnout, et cetera, and all that jazz. And this is stemming from that problem I discussed in older videos, which is the lack of investment in the parks, okay? So recall that issue. That now, the rooster came home to roost, saying? Is that the saying? Anyways, so yeah, Disney is now saying, oh, well, people don't want to ride rides that break down a lot, right? It detracts from the experience. So, and they had the recent hotel failure, et cetera. But I think that Disney has a great amount of assets. I didn't disagree with anyone back in the days when I was buying Netflix. When I was buying Netflix, a lot of the comments I got on this channel were, oh, Netflix has crap content. Disney has all of the IPs. I don't disagree with that. I just think they mismanage the IPs. And I think that there is a price at which Disney was, okay, attractive from a risk-reward perspective. Disney could get more attractive, absolutely, actually. It could be that Disney has further to fall because things could look really dark, okay, for Disney. Right now, I'd say that they look bleak for Disney. But they could look pitch black for Disney in the coming, let's say, year or so, especially as the economy starts to go through this downturn. If we see consumer spending start to detract, which I have kind of talked about and don't want to segue into too many topics, but right after this, I'm going to move on to Dollar General, and then I'll kind of add to this topic. So just remember this macro or economic conversation we're about to have on the consumer. So Disney, no secret, relies on that consumer spending, on that discretionary spend for families, vacations, et cetera. And then there's the content spend. Netflix, I think, has figured it out beautifully. And I had all my praises on Netflix last year, kind of discussing or talking about why Netflix has discovered that secret sauce of what film, cinema, the art form really is. It's about creative destruction. You try a bunch of things, a lot of it fails, and then you have a lot of hits too. But you try everything. You let it all go. I don't want Netflix to focus on that blockbuster model within streaming. I think Disney dominates that. And just Disney needs to figure out how to make the content that people really want and improve upon that. But the ingredients is there for something amazing, truly amazing. So, and then of course, after they create that massive, beautiful content, they can monetize that IP further through licensing deals, et cetera. And there's a lot of ways. And then that also drags people over to the parks. They inspire the next generation and all that. So for now, Disney's in a dark time, let's call it. So, but we'll see. I think that right now, the real setup, the true setup is that they have to just fix up management team. All right. Before we get into Dollar General, I'll address Tattooed Chef because we haven't had this talk since Tattooed Chef. So Tattooed Chef, yeah, it's TTCFG and it is Gonzo. Oh, TTCFG, yes. So they're down only 0.77. No, I'm kidding. But they're 10 cents. So the company that was made famous by a YouTuber, the first time I've ever seen that truly. Of course, that's nothing new to see influencers make stocks, popular, famous. But you would go on Seeking Alpha and you would go into the comment section and, people on the Seeking Alpha comment section were talking about this Jeremy guy. So yeah, the company's now declaring bankruptcy, just following the same trajectory as a very good food company. I think the other one that what's Voyager Digital, that was the other one. We'll see about the Planet 13 one. All the cannabis stocks really are problematic at this point. Trying to think if there were a couple, I think. But anyways, just to pick 3 companies within a short time frame to go bankrupt, that is definitely, like I said before, a skill, but a very useless skill. I don't really know what you can do with that skill. Because if you're buying them, if you're shorting them, and if the short position makes sense, given all the costs, et cetera, then maybe that's something different. Okay, so what about 2 more years of Bob Iger? Okay, before we go into Dollar General, I'll address that comment because that's relevant to Disney. Let's see, there's more comments on Disney. Disney has the best IP, absolutely. So Bob Iger, I don't like him. I don't like Bob Iger. I think Bob Iger really harmed the company. That's super, I don't know, maybe controversial. But I think Bob Iger did more damage to the business than Bob Chapek. Okay, Bob Chapek, I think, was the fall guy. Bob Iger was the one who loaded the company up with tons of debt. I think there was some conflict between him and Kathleen Kennedy. Kathleen Kennedy being the person who I believe completely obliterated the Star Wars IP in my eyes. I used to be. This this is where, you must be saying, like, why are you investing in Disney if that's how you feel? It goes to show you, I try to put my emotions in the cabinet when I'm, deploying capital. And I try to look at things objectively, even though I believe that she single-handedly destroyed an IP that I loved. It's completely recoverable. I'll replace Star Wars. But I used to be a pretty big Star Wars fan. And then I can't get past the newer content, really. Yeah, because it's canon, and I can't get around it in my head, guys. I know some people say, okay, just only go 1 through 6 and everything else, and maybe include Rogue One in there, and apparently Andor is good, okay, and the Mandalorian. Include all Mandalorian. I think people got controversial. The Book of Boba Fett, blah. But point being, like, people say, oh, just ignore the stuff you don't like. It's like, I'm not one of those. I can't. But it's fine. It's like, just move on to other things. So, Disney, or some people within Disney, which I think, again, going back to my bear thesis back in the day with Disney, was the bureaucracy and the lack of care for their IP would be their downfall. Here we are at a price point where, let's going back to Disney. I mean, how long has it been since we've seen it? Like, it's been dead money for 5 years. You've lost money investing in Disney 5 years ago. We go back even further. It's been dead money since 2014. Like, that's outrageous. That's terrible. So Bob Iger I think he took over in 2006. So people remember him for this, but the thing is, it's like, okay, well, he did great stock price wise in that beginning period. And then just, I think, fumbled the ball. Well, I only have his recent track record to go off of what he's going to continue to do in the future. I don't really care what he did 10 years ago. Sure, respect it, whatever, but I'm going to judge him now on his most recent performance, and I don't really like it personally. Now, him being there for 2 more years, maybe he can change and all that. I'm looking at it from the valuation perspective. I'm getting it at that kind of baseline dead money level. Of course, I've addressed this before, that Disney is not the same company you were evaluating in 2019. When I look at the Disney of 2019 versus Disney of today, you have a company that's laden with debt, and now they're looking to sell assets. Who could have thought that was going to happen? Super unpredictable company laden with debt. Cash flow is getting absolutely destroyed by different investments, and they don't understand why people aren't resonating with the content. Whoa, okay, crazy stuff. But anyways, Disney has its issues. I think what I'm buying with Disney, and it's not a big position. It's not even going to get to a big position. I'm going to keep it rather muted. But I think that there's potential for the company to change things and turn things around. Okay, so going over to Dollar General, unless we have some more questions. Are you selling out? No, I'm not selling out. No. I even though, okay, so this is something you should know about me. I think I'm an honest person with my investments. I do not like to just blindly be bullish on the stocks I own. So what I'm basically going over here, if you can see, this is like a mental exercise. I own a company, and I'm talking openly with you guys, the audience, about the problems that they have. And usually if there's a decline in the share price, significant decline, there are problems that are there. Now, the difference between the problems that Meta had and Disney has is Meta had a problem of perception, not a problem of, let's say, I think Disney has real problems. I think Disney has management issues. Meta didn't have the management issues. Meta had perception. The market was, at a lot of times, I think maybe I'm taking the words of commentators a little bit too seriously, but these are commentators with a lot of reach. I don't know, we were looking at completely different financial reports, just completely different financial reports. I had no idea how they were looking at the same thing and getting something different out of it. With Disney, I think it's very clear the problems that they have. So that being said, I don't think it's nearly the same opportunity whatsoever, and its allocation is therefore also muted. So, because we'll get into that when we get into the topic of why investing should be boring. If you're such an honest person, what are your thoughts on Honest Company, one of Jerry's bet? Well, okay, I'll say this. So Honest Company is, if they can figure out how to manage their costs, and if they survive this, if we see like a consumer retraction, in spending, or at least a deviation in spending, which we're seeing, by the way. So that's 100% certain. The discretionary spend shift is happening across the board. Commentary from Walmart management, commentary from Target management. This has been happening since middle of 2022. I made videos and live streams on this. So that shift, if they survive that, there's potential there, but I think there's more potential in that business versus a very difficult business being frozen food, another very difficult business being the cannabis industry. So, and the ridiculous Ponzi scheme business of crypto lending, which was Voyager Digital. So I think that's the best one that has it, but doesn't mean I'm buying it. Okay, so going over to Dollar General. So Dollar General has been one that I think is one of the fewer opportunities around here. And it's not really like a screaming opportunity. It's not like this is the cheapest price I've ever seen for a company and I have to put all I have into it. But it's something that I found interesting. And so Dollar General's commentary on the macro, and I said I would bring us right back to this, and here we are. Dollar General's commentary was focused on the consumer having been spent out. They can't increase prices anymore. So that should be a little bit somewhat alarming. There's another investment I have that also focuses on a lot of blue collar spenders, and blue collar seems to be struggling from that point, right? They're not having let's say the amount of increases is coming down and down and down. They can't take it. And so Dollar General's commentary, I think, is really powerful for us to kind of take into account. And when we're modeling out our predictions for, let's say, other businesses that have similar customer base, then we need to kind of take that into consideration. Okay. So what does that mean at the end of the day? Well, if I think for a moment that we're kind of entering, and by the way, inflation data, we should probably talk about that, right? Because we haven't had a conversation about that either. So inflation data seems to be coming down, and I think we've always been talking about how that's a lagging indicator, right? So there were other things that we were talking about and paying attention to. And again, I apologize for not having live streams or videos, but if you guys have been community members for a while, come on, go search in your memory box or go back to the older live streams. I think that's too much content to watch, but if you want to, go watch them. And what were we talking about with the lagging data, right? And why that can be problematic when you're trying to kind of extrapolate information from that. Well, now that the CPI is coming down, now people are kind of reacting and what does that mean next? Well, what happens next? Well, the last thing that you'll see, and I guess this will be another fun prediction, but it's not really a prediction. It's just an observation of historical trends and then kind of taking those historical trends and my limited understanding and then applying something kind of let's say, diagnosis to it. So the last thing you'll see is unemployment. So unemployment will be the final indicator. That's one of the most lagging indicators. And it's why I always, when people ask me, I say, well, don't use that one. If you're using that to tell you how the health of an economy, you're always going to be behind. So CPI is lagging, and we discussed why CPI was lagging, particularly like what are the components of CPI and what made that up. So demand destruction was a topic we had before, and it depends on where you're looking for it. So Amazon Prime Day sales, that was really strong, and I have investment in Amazon. I think Amazon's going to take a lot more share in this downturn than people realize. Walmart's going to take share. Target's going to struggle, I think, but Walmart's going to take share. Amazon's going to take share. The big are going to get bigger in this downturn, and that's great for them because they've made a lot of investments in efficiency and logistics, and all that's going to bear fruit. And so I congratulate those of you who invested in Amazon, because my thinking here, and this was something that we discussed in the Thursday private stream, so by the other analyst, Leo, that people are going to be surprised on Amazon's earnings, potentially, right, with the retail segment. And the retail segment has been one of the weak points. And I've been talking about, and before we'll come back to Dollar General, I promise, but we're talking about Amazon right now, so I'll bring up Amazon's share price. So Amazon's rally has been, in line with the broader tech rally, but I think that the largest lagging component of Amazon has been Amazon retail, and people have been, having pretty negative views about it and wanting it to spin off cloud, et cetera. Well, I think, of course, they're going to continue to kick along with cloud, and cloud's going to perform still pretty well, which cloud is. Ads is going to blow people away in a couple of years. I promise you that. I think, I think I've stated this before. If you don't remember me saying this, I'm going to say it again. Amazon's ads business will be larger than that of Meta's potentially in the coming years. They have the most valuable type of customer to advertise to over anyone. And it's fascinating to kind of watch Meta also still improve. So maybe I eat my words there, and it's not true because Meta still improves drastically. But I think Amazon will blow people away with that. But if we see strength in the retail segment, which we're already kind of seeing, that is removing one of the final concerns people had with Amazon stock. Okay. So that was part of the huge bear thesis, was they invested too much money, which I agreed with, by the way. If you go back to my Amazon videos or my Amazon thesis, I agreed with that. They overinvested. The management team admitted that. They overestimated the continuation of growth, and but that comes to an end, and people forget that when they're kind of projecting out cash flows. That comes to an end, and it was hard for people to wrap their heads around that. So when Amazon was trading at about $80, I don't know what people's valuations were telling them, but I shared it with the group, right? You guys still have the write-up available to you guys. And the point of that write-up was to discuss why Amazon's valuation at those price points of $80-ish, which it ended up getting down to, I think, 80 or 70, somewhere around there. I can tell right here because this is low 80. It almost got to 80 exact. That point was a really good risk reward. Just so happened to be actually close to the bottom. Wow. Okay. So, Fabio, what's the difference between Amazon advertising and Amazon product recommendations plus platform costs? You mean like internal business distinction between the two? I don't know because I don't work in Amazon, but how is charging for advertising different from charging for cut of merchant sales? Okay. So now that is the other part that Elemental, which I was really excited about, which is switching over to third party. So charging for other people's sales. And I shared this video, or in the video for Amazon and in the pitch for Amazon for Icon members as well. The trend of Amazon going from first party or itself selling it to third party was continuing along. And that's what I wanted to see from Amazon. I don't want to divvy out too much in that. I'm just kind of pointing out that was a reason I really liked it. But getting back to your question, so the difference between Amazon advertising and Amazon product recommendations plus platform costs. I assume platform costs you're talking about like fulfillment by Amazon, et cetera. I don't know exactly what the internal distinction is. What I say is Amazon advertising is when they're putting the ads in front of the consumer, and when they're recommending products, like when you search up a product, Amazon brings it up first if they're paying Amazon to do so. That I consider part of Amazon ads. If internally Amazon doesn't consider that ads, that would be something interesting. I would wonder why they don't, but I believe that would be. But that's ultimately what I consider as part of that overall thesis, or not overall thesis, overall thought process and categorization. Amazon made it possible to start my worm farm from my garden all the way in Japan. Amazon for the win. Yeah, there you go. Positivity for Amazon. We don't get that much on the internet. Write-ups, best capital mindset write-ups discussion, deluxe section, Fuhat's work. Oh yeah, Fuhat's write-ups are absolutely a gold mine. So boasts record sales for Prime Day. No, yeah, exactly. So Amazon's been killing it. Hey Fabio, where can we join the community? Is there? Oh yeah, there's not probably a link on here. I always forget to put links. I think I have the link in my videos. You can go to one of my older videos and click the link there. See, I'm really terrible with like making it easy for people to join. I know I have to improve upon that. I kind of almost like it's like this thing out there that you might find the link to. Maybe a friend gives it to you and you can join. And then even when you join it, it's like fun. All right, but thoughts on Digital Bridge? Oh, you'll post the link? Yeah, you can post the link, Bacon. Victor's question. No, it's a freemium model. So there's a free portion of the community, and then there's a paid portion of the community. The paid portion originally didn't come with any benefits. The benefits just came because it's like my way of saying, kind of a thank you. But basically, you just get private content and also write-ups as well as the portfolio updates. New to your channel, come from the Come Up series. Hey, how you doing, Beverly? Can you do a video or direct me to resources about red flags to watch out for when doing company analysis? We can talk about that here. That's the point of these live streams. These live streams can kind of go in the direction that the audience wants. Thoughts on Digital Bridge, though? I think Digital Bridge will do fine. It just depends on how liquidity returns to the market and the appetite for private investors in digital assets. So let's kind of unpack that a little bit. So Digital Bridge, private equity firm. It used to be former REIT, switched over to private equity business model. So basically, they invest on behalf of others. And what you're getting from that is exposure to PE, but in digital real estate or digital assets. That could be cell towers, data centers, fiber, anything that you can think of when it regards to digital infrastructure. So they're pure play focused. You have other businesses or other private equity firms that do invest in that, but none of them that are publicly traded like Digital Bridge and are purely focused on that asset class. So that's an advantage of investing in Digital Bridge. If you're looking for that exposure, you have that. Now, issues with Digital Bridge is it has yet to be seen, like the digital infrastructure space is relatively difficult. Cost of maintenance or cost to upgrade equipment, it can be a deterrent. Jim Chanos has a really good public research report, short research report, and keep in mind he is short a lot of these names. So you can read that for further color as far as like what you should be cautious about. He gets into a lot of the accounting components of these businesses and why when they have to, let's say, the costs aren't appropriately reflected and they have to constantly upgrade their equipment and states. So that's a bit of a problem. So, or that's not maybe actually a problem, but it's something you want to think about. Like always look for the other side there. Okay, so let's see here. I'm not saying Amazon ads aren't good, but I'm not sure this is really a new revenue source. Seems like it could be a new take on an old one. Yeah, exactly. No, it's nothing. It's nothing like reinventing the wheel per se. Seems like it could be a new take on an old one. Maybe it's a great idea still. So yeah, that's how I believe that it's going to turn out, that it's just going to continue to chug along and grow, and the value add to Amazon will be significant enough, like it's going to be their second most profitable business behind AWS. AWS being number one, ads for now number two, and then retail doesn't even have to make a profit, but if it does, great, because I think retail just brings people into that ecosystem for ads. So I think you could almost put them together that with retail's expansion, you get more promising results in the advertisement space. Okay, so let's talk about Beverly's question about the issues or video direct me to resources about red flags to watch out for when doing company analysis. So I'll go over let's start with basic and then go a little bit crazier here. I won't spend too much time on it, but I will get into it. So red flags that you want to look out for on the surface is we can go direct ourselves to the balance sheet of any business, and you can look for the cash or the current assets, right, versus the current liabilities and long-term liabilities. So cash versus debt is a popular one. These are just very basic it would take you probably just 30 seconds to tell whether or not a company is a bit in trouble, if they're taking on too much debt relative to what they have in the bank. And then that's kind of an example. Another one that you can think of, if it's an inventory heavy business, I don't know if I'm skipping ahead too much here because that's getting a little bit more detailed, but I feel like it's fair enough. If there's an inventory heavy business and the inventory levels are rising, that's something that could be a red flag because it means that they're not moving that inventory out as quickly as they otherwise should be, and that could be a red flag. That doesn't show up immediately. So trying to think of a real world example recently. I think you could look at Cardinal Health back in 2022, late 2022. The stock price, or sorry, not 2022, 2021. The stock price was plagued with issues. And at one point in one of their quarterly reports, what was brought to light was their inventory problem, and a lot of their inventory was piling up, and some of their inventory expires, and that's a cost that they're going to have to write off. So that was something that you could have kind of spotted if you had looked at the inventory figures a little bit and done some analysis. But that's a little bit of a harder one to spot, if I'm being honest. But it's one red flag you could look for. I think another red flag that's extremely important to look out for is management team. So management team, one thing you could start with is look up management team name and then scam, right? Literally right after their name and then scam, and then see what comes up. It's a very simple one. You might find a lot of garbage. You might find hit pieces, but maybe you find nothing. And okay, that's good. But I can't tell you how many times I found, okay, the only reason why I'm hesitant to name this company is because I know the CEO is pretty litigious. But there is a name of a company that owns restaurants. The CEO is no longer there, by the way, and he actually he is getting investigated by the SEC. I had a whole video planned out for YouTube, by the way. This is a video or a research I sent to Strongman Personal Finance, and this actually was what started the relationship between me and Strongman Personal Finance, by the way. If you want to know the origin stories of that relationship, it started by that individual that he goes after a lot, Jeremy Financial Education, made a video promoting this stock. And I had been doing some research along with my partner at the time, Austin, where we were investigating this company. And what we found was pretty much fraudulent behavior. And you could just piece it together by following where the money was going. And also, what was funny was that the CEO had a track record, a criminal track record, which made it hilarious. But one thing you could have easily found, by the way, it was super easy to find. You literally just put up the name of the CEO, and then right after it, you put up fraud, and then came up with the stories of how I think it was he defrauded a pension fund or something like that. And he served time, by the way. I'm not going to neither confirm nor deny the ticker symbol that someone just mentioned. So I will not confirm nor deny that. But if you look into that on your own time, and you suspect it is that ticker, which one of you did guess the ticker, but not confirm or deny who said that. You'll find that the CEO, he's now gone and he's being investigated by the SEC. And yeah, it turned out he was kind of committing fraud there. He did a lot of sketchy things with the business. So anyways. Let's see here. Making 10 cents a dollar is a good for a restaurant, hard way to make a living. Yeah, it is. Okay, I'm about to invest in Silicon. All right, anyways, I said we were going to go back to Dollar General. Let us get back to Dollar General before we get into like other topics. So with Dollar General, this is an investment, and part of this, the title of this live stream is, where are the opportunities at? Well, Dollar General, I think, is like one of the fewer opportunities that we have there. Oh, and I literally just realized this. You guys can't even see me. This is hilarious. You guys couldn't see me the whole time, and I had no idea. That's too funny. You guys have literally just been seeing just the screen, and then I'm a little rusty, guys. I'm a little rusty. What can I say? Fabio was just the voice from God. No, I am out of practice, Bacon. No, for sure. So literally it was just, that's too funny. All right, so for like a good, I don't know how long of this live stream, you were just seeing the tickers and just a voice talking about it. Okay, well, I was doing all these hand expressions and all for naught, right? Just complete waste of time. All the hand expressions just out the window. The Italian side of me just complete waste. All right, well, anyways. Moving on, Dollar General. So we have a company here that caters to those of the population that can't really are looking for a bargain, the bargain shopper. Not so much the Walmarts of the world. Also, they cater to areas of the country that other stores like Walmart don't want to service because they're too far out. The logistics don't make sense. Dollar General, for them, it makes sense. For Dollar Tree as well. So you have these businesses that focus on going out there and catering to those customers. Now, what they're going to do, okay, is they're going to invest in some fresh produce, et cetera. And that was a huge political topic that they got a lot of flack for. And they're going to do it now. I think that Dollar General has been historically a very strong reinvestor of capital for shareholders, and I think that's going to continue into the future. It's just these temporary blips, I think. So the opportunity here with Dollar General is simply to keep the thesis simple: is great company, fair price, not super discounted, best value, no risk. No, it's not that at all. But good company, fair price. Not good company. I would almost call us a great company. Not like a fantastic blow your socks off thing, but a great company. And while before it was a great company at a expensive price. Okay. And I think it also, you can think about it like this: any kind of economic downturn, I think Dollar General, Dollar Tree, those companies, they're going to continue to take share in some of these towns. So a lot of more, let's say, potential customers and expansion and relationships, et cetera. And I think they have further opportunity, like this investment they're making in fresh produce. I think it's going to pay dividends in the future. Just so happens for you dividend growth investors, this is a fantastic dividend growth stock. So that's not why I'm investing in it, but just so happens to fit that criteria. So some of you who want, that's your preferred style, preferred investing strategy, you can take a look at Dollar General, think what you guys like. Okay, so we have some questions coming in. So buy TTCF for the produce. Yes, Stone Cold Investor. Yes. When are we getting another Rue Rabble or another group stream? I enjoyed all of those. Okay, how about this? Strongman is in the Discord. You can ask him. I think he would like to. He got busy with all that family stuff. Like the kid thing. Kids. Yeah, he got busy with that. And we all got busy with other things. But I enjoy those too. Why do you think of blank unknown stock as a short? The stock has not done that bad. They're sitting at $1 billion in debt. Okay, so Keitham Rahman, it's actually a funny story. So if you look at how much is owned by the insiders, in this particular that guy, there really wouldn't be any much selling pressure per se. So I almost want to just release this video. But if you ask me in the community, I can be a little bit more, I can walk you through the story rather than in public. I'm not too comfortable walking it through in public. Okay, so yes, this is real brick, Marcel, behind me. Looking to buy a watch, Grand Seiko or Omega. It really depends because you have they're very different brands, different stories. First, the classic watch guy answer is going to be, well, pick what you like. Grand Seiko is going to give you that more. Grand Seiko has a history, right, of just that premium Japanese watches. A lot of watch guys don't like Grand Seiko. I think Grand Seiko's great. So the people who don't like Grand Seiko, their main commentary is it's just a Seiko with a higher price tag. So they'd say just get a Seiko, and you get a lot of that similar history versus Grand Seiko. Similar, not the same. And then Omega, you have one of the oldest watch brands in the world. People are kind of hating on Omega right now because of what they're doing. But they make some great pieces. They make some great pieces here and there. I actually particularly like the World Timer. That's one that I think is a beautiful piece. I'm not sure. I haven't checked out the new one, but the older one I really did like. I didn't pick it up, but yeah. But I think I think it really depends on the model, actually. So your question really matters, like which model you're comparing, like what Grand Seiko, what Omega. That's kind of a better question to ask. Okay, so let's see here. For real, though, I've been accumulating some retailers in healthcare lately. Yeah, I think Stokel Investor, you got the right idea. So some of these retailers beaten down, there isn't an abundance of opportunity. So I'm going to see where the poll ended, and I think we got enough votes. Oh, yeah, we got 119 votes. Oh, yeah. All right, we're ending this poll. All right, so the poll results, where are the poll results? So we got 46% of those polled said no, not really. They're not finding opportunities. And then we have 21% saying yes, some opportunities. Then yes, here and there, 16%. And then yes, many, 15%. I think I fall on the yes, here and there. So I don't find a crazy abundance of opportunities. And I think now this is a great segue into why investing is boring or should be boring. So if you guys notice, like I don't have, really all much to say when it comes to big changes in my portfolio on any given year. I mean, I've been on YouTube for a bit now. And if you guys check out how much my largest investments have changed, they really don't. And that's kind of the issue that I was discussing earlier in this stream about where most YouTubers in the finance space are content creators first, investors second. If you're an investor first and a content creator second, you end up with a bit of a conundrum there because investing is supposed to be boring. And what I mean by that is when you pick out a good investment, nothing much supposed to change, right? And I sound maybe like a broken record here saying like, well, why aren't there like 1,000 meta videos in my channel? Because that would grow the channel a lot, just like meta video. Oh, next Monday, meta video. Wednesday, meta video again. Like you see a lot of these channels that they'll do that with SoFi. And then like recall, it's kind of funny that the SoFi dedicated channels, the percent gains we made on SoFi investment is probably potentially I think larger than all of theirs. But and we don't really care for the company. But they make video after video after video after video after video after video. And then, for example, Palantir is another one. So Meta, I mean, should be theoretically one that would work with that, but it's not going to provide any actual value. You could make the argument that it brings new people into the fold and brings people's attention to the older videos, but I don't really believe in that, or I don't believe that actually happens. I think people don't watch the older videos. So instead, when I get asked, and this is the broken record part, is like, oh, make another meta video or update on meta video. I said, nothing's changed. Go watch the old video. If you do good research, it should last you a lot longer than a week. And that's the problem. Realty Income Corp, thoughts on that? Love it. But I don't think it's going to experience the same rate of return. I prefer Agree Realty, ADC. Okay. Fits a lot of the same features you might like of a Realty Income, but you have founder-led, family-led. You have higher investment grade percentage tenants, and you also have a monthly dividend if you like that. So yeah, there you go. Yeah, I finally appreciated that about you, Fabi, not being hyped. Just chill and to the point. Also, you bring up names that retail doesn't research. Yeah, that's what I want to do. Okay, because I am an investor first and a content creator second, and that's so basically like YouTube as a income source is not the primary motive factor, and it's tough to like say, but I think like Meet Kevin's levels, that's like very difficult to manage that, where it's like, how do you manage where it's not, right? Because he's pulling in at this peak, I think was like what, 10 million a year? Oh, well, no, that's including courses, and I don't have the soul to do courses. That kind of course. I think like the thing is, it's not so much that I think courses are useless. I don't know. I think it's almost like a judgment basis or like case by case basis, but I don't know if it's a useful product, and I don't think I can sell a product I feel like is useless. That would be especially for a significant amount of money, which Kevin's courses are a significant amount of money. Like for example, like $8,000. Can I justify charging someone $8,000 to spend a day with me? I mean, great, money's great, but like I don't know. I think I need SMBR to buy spoken with investor relations. Oh yeah, that's an old joke. I love that joke. Is there any recommendations for fundamental and analysis courses? Shaker OTBI. Honestly, what I think is really good is finding a solid community to discuss with. That's honestly what I think is a good way. Courses, I don't think that's I don't know of any. Oh, we have the man, the myth, the legend himself, the Strongman Personal Finance. Okay, so Strongman, everyone here has been asking, shouting out my course, by the way. Okay, yeah, actually Strongman's course. Strongman, everyone's been asking, when are we going to do the Roo Rabble again? I've been trying to explain to these heathens that you have something called children, and also a job, and then you have to also make YouTube videos on top of that, so that you can fuel the grift. I don't know much about Agree Realty, but I've mostly traded sideways for the past 5 years. It's been a long term. Yeah, no, absolutely. So that's the thing. So a lot of these triple net lease REITs, I mean, even Realty Income, I think has traded rather sideways for, I think, the past 5 years or so. Yeah, they both kind of traded 13% in 5 years is underperforming. Okay, next weekend. Absolutely. Let's do it. All right, so there you go, guys. Next Saturday, 8 p.m. Eastern, we are going to have another Roo Rabble. Okay. So someone said gold is pretty. I like, yep, it is. How to utilize the Discord community for a newbie. Okay, so Dre Inc. GD. How to utilize it. So oh, there we go. Echoes from above. We're getting everyone in here. Look at that. We're just missing Cole. Cole in here would be complete the Roo Rabble. But anyway, so the Discord community, actually, you should be presented with a video. If you're not presented with a video as soon as you enter it, then there's a problem. Because I think I knew that it was complicated. I need to probably make it less complicated. But because it's a freemium version, we have like a little bit of a vetting process, which is why it's complicated. But you have to answer 3 questions. After you answer the 3 questions, you are let in by the moderation team, either myself or anyone else who's online. And then you will also get the ability to then go through all the free channels, and then you can go to the paid channels there's I think a 1 week free trial for the paid one. And you can see basically everything that's available or allotted to you. Before, for some reason, it was set, I think it's set standard to like a day on Discord or something like that, but I set it to a week, so it should be a week. And then, but there's no pressure. There's like, I think, value in both. I haven't been as active in the free one lately, only because my time has been very limited, and I do want to make sure that I give the content that I can, which I focus on providing the private content, because those guys, I really want to basically give my thanks to them. And so we have the 1 live stream a week, and then also the Sunday call, which we now have a joke about that, and I'm aware of the joke because it is kind of funny. The Sunday call can also be the Monday call, or the Tuesday call, Wednesday call, Thursday call, right? Just simply because on weeks that I get busy, I have to move the call and sometimes cancel it outright. But for the most part, there is a call a week. But we call it the Sunday call because it's mostly on Sunday, but it does change. So it makes it a bit funny. Okay, get Kingdom in here. Well, Kingdom... Is Kingdom in here? I don't know. All right, let's see. What's good, Fabio? Hey, how you doing? Echoes, how you doing? He will debate Strongman again. I would love to see that. Okay, that was very entertaining. Being in the middle of that was pretty funny. But yeah, all of that King of Tops. That's now a joke. So we all like to play with each other because Kingdom of Finance. He's a funny guy with that respect. I think he was always dogging on Kilroy. Am I right, Jesse? Stone Cold Investors. Like, come on. And then he makes the Kilroy video, which, Kingdom, if you're watching this, I saw that video. Okay, I saw that video. And I remember all the dirt you threw on Kilroy. Oh yeah, we have all the messages. But yeah, we like to play with each other. Okay, Julius, there you go. Fine. Does your pay Discord level include Stonk Analyzer tool? Dom, aren't you part of it? I feel like you. Wait, are you not part of the? I feel like you're part of the Discord. So it should be no secret that is something I am trying to get to work on, but I haven't. It's not something I've been focusing on lately. There's other things going on. Okay, so Marcel, LOL. No, yeah, just walked into that. We should just call it the call. Yeah, we actually should just call it the call. So I'm going to change the language to one call a week, mostly on Sundays, and then we'll kind of discuss from there. But anyways, so that kind of summarizes the topic of like why investing should normally be boring, right? There shouldn't be that much excitement week to week. That being said, there's always new things to analyze, and that's where real content can really come from. So I can make, even daily content if time permits, because there's always a new company to really discuss. It's not going to be, a positive viewpoint on every single stock is what I'm getting at. There's not an opportunity everywhere you look. I'm trying to think of the other opportunities that we've been kind of penciling out in the community, because the REIT opportunity is kind of closing up, in my opinion. Like, it's not as enticing as it once was, but it's still there. Most real estate investment trusts are trading well below NAV, and NAV, for anyone listening, is net asset value. So it's taking into account the real estate value, and it's an estimate. You kind of have to do this analysis almost on your own there, because what you see on the balance sheet is the book value of the real estate. So you can kind of assume that the book value prior to depreciation and amortization, but prior to the depreciation of the properties, that is somewhat of a number you could use, but that's still not reflective of like the true market value. Okay, the market value is what the market value is. We don't know what the market value is unless you have estimations of what that is, or you go to sell the property. The estimations are as good as they are; they're just estimates. So you can use comparables if you somehow know that information. So companies that I've used that in the past, for example, is the controversial. When I did the analysis on the CXW and GEO, there were some properties that were sold. So both of these trade well below what their NAV is. If you use comparable sales data of what the government repurchased some of the private prisons for to turn them into public prisons. So if you use that data, both of them trade pretty cheaply. Core Civic, just because I'm on this topic, is the less risky of the two. Very controversial, very controversial. Okay, so with that being said, there's also the conversation to be had as like the return of some of the let's say memeier stocks in tech, that if you have the word AI, I think the community made the joke, and I think it's a great joke. I laugh every time, that if your earnings report has more mentions of AI, it causes your share price to just jump, right? You could be doing whatever, you're a Dollar General, and then you're like, we are using AI to determine what to put in our freezers, and then that just causes share price to shoot up just 20% right there. So that's something that I found quite funny from the community, and I think that's going to be continued rolling theme with the evolution of these language models like ChatGPT, and all the different excitement from investors around that, because you have what's the ticker? I think it's AI stock, which is, I think it's AI. Let me make sure. So yeah, C3AI. I mean, let me see how much of a tear. I don't even know, because I haven't paid attention to the stock in a very long time. But if I click year to date, I bet you it's on a tear. Oh, okay, there we go. So that answers that. Union Pacific. But if you have any direct questions, you at my name, because on this platform it shows up if you just do at Capital Mindset. Otherwise, I kind of just assume, or I try to read through them, but there's a lot coming in. I just assume there are, Elemental. No, don't worry. I know it's not. It's a language model. ChatGPT isn't AI. So for context, Elemental, I think from I remember your conversations in the community, you actually worked or currently work in what you consider true AI. So it always, and I know that because I do pay attention to everyone's conversations. You guys are all people, members of the community, and I get to know some of you more intimately. And then so Elementals, I see every time he gets triggered when people call it AI. He goes like, "That's not AI." I'm like, "Calm down, Elemental." And then he got his oh bruh, bruh, it's been so long since I've seen you. This is so fun. Bro, I've missed your bros. I missed your bros. Those are always fun. You're always just waiting in like the shadows for something to be said, and you just come out and go, bruh. Okay, so let's see. So UMP, CNI, or CP. I'm looking to add railway, and I'm curious about your opinion. Well, actually, the one that I kind of thought was at a moderate discount for a reason was Norfolk Southern. But the one I like the most is, let me make sure, because I always forget. I get them confused all the time. No, it's CP. Yeah, CP. CP is the one I'm the most excited for because I think that their railway network is the most promising of all the other railroad companies currently. Of course, the caveat to that is they're kind of like priced for that. But what I think is going to happen is you're going to see an increase in the growth, but I think that their multiple is going to be maintained. So most of the time, you actually do generate really solid rates of return by buying expensive stocks, and you have multiple maintenance alongside that continued growth. Because what you got to think about is the market might want to pay up for this in order to or pay up for the security of those cash flows, because there's not really anyone who can come in and take Canadian Pacific or Kansas City's lunch at this point. What they ended up controlling, what they're ending up to control here is pretty much the entire railway system going up from Canada down to Mexico. And so you have a lot of themes there. You have the reshore theme. You have, again, continued growth in the United States, but reshore theme mostly playing into that. And that's going to drive a lot of traffic through their rails. So pretty positive. So between all those three that you mentioned, if that's the only options I have, I'd probably go with Canadian Pacific, Kansas City. That's such a mouthful now. It's kind of crazy. All right, so we see... what's the other question you had? Yeah, if Home Depot will use AI, their investor. Yeah, absolutely. Okay, so we have some further questions here. Marcel, what do you think about needs to happen for commercial real estate to have a turnaround? Do you think we will see an acceleration down, deceleration, or coming back up? So always these interesting conversations I had with people in the commercial real estate space was like a lot of people got involved in commercial real estate that had no business getting involved in it. That's anecdotal, but what we can kind of see is in some markets, office has been overbuilt. I presume part of that commercial real estate question is mainly focused around office, because if you're talking about retail, such as the things that a realty income or a realty buy, there's not really a crisis going on there. That's why they trade at the premiums they do. But the office space, life science, a little bit's coming under question because the thesis is having some chinks here. But office, a lot of markets overbuilt. I don't have a Kilroy video, so consider this to fulfill your appetite or I get hopefully help out until I make this Kilroy video, because I do want to make that Kilroy video. That is on my list. But the main thesis with office is you want to stay away from anything that's not A-class. Of course, you can make a tremendous amount of money if you pick the right one that's in the non-A-class property, or let's say maybe A-class, but in a really distressed market like New York City right now. You can make a lot of money there. But I believe the way to play this is, and that's how I'm playing it through Kilroy, A-class properties only in certain markets that are beaten down but not really destroyed cities, such as like the San Franciscos, the Seattles, these A-class cities, A-class properties, also some cities in Texas as well, particularly Austin. But you have some of these cities that the office space has been tremendously overbuilt. Or there's too much availability. The ones that are going to suffer the most is anything below the A-class. So even as you start to see companies vacate space in office buildings, they're going to vacate into the C's, the B's, and they're going to go into the A's. The A's, maybe they get, let's say, oh, we have 5 floors. We're going to go down to 3 floors. Well, what's going to end up happening is those 2 floors that become vacant, other people are going to move in, but they're probably going to move in from the B's and the C's. The B's and the C's, and this is kind of true. If you guys know anyone in commercial real estate, ask them this question. What performs better in any downturn and why? They're going to tell you the same thing I'm telling you here. It's A class. A class because they swallow up all the demand from B and C. They're always going to have an easier time. A-class property, if this is a new term for you, I'll try to explain it in layman's terms. It's fairly easy to understand, but you have the different grades of a property. A-class will be newer, better location, better amenities, etc. But think more like a newer, modern-looking building. That's going to be your A-class property. And you ask yourself, if you're a tenant, if you're an employee working for a firm, if you have an A-class property or office space and you have a B class or C class, you're going to be more excited to go to work if it's in an A class property because you probably have better amenities. What I mean by amenities, maybe more state-of-the-art bathrooms. Let's not, I don't know if you're into that, but it might have a really cool bathroom, might have a cool cafe down there at the lobby level, or maybe it's a cafe on your floor, and that's cool too. So that's kind of what I'm kind of referring to. Just the amenities are better, the location's better, it might be closer to where you work in the city, might be in a low crime area, so you don't have to worry about your car getting broken into, etc. So those are some of the characteristics that you're kind of should be thinking about when you're thinking about an A-class property. Okay, but mostly like just newer and better location. All right, so let's see, up pretty large on OTCM over the past few years. It's pretty overvalued right now, but great company. Do you ever sell great ones? Also, are you aware of this business? Okay, so no, I haven't been paying attention to OTCM. So this. You mean like this is the let me actually pull it up here. This is the OTC markets, right? OTCM. Yeah, the OTC markets group. Okay, OTC markets group. Yeah, it's still pretty small, really, all things considered. But yeah, you probably have done really well. It's kind of flattened out here. I think you're probably saying it's expensive from a PE basis, small dividend yield, 727 million market cap. I mean, it's like, I don't think it's going to trade at the same premium as like, or maybe it's similar premium actually right now to International Continental Exchange. No, definitely not. Never mind. I'm smoking something. There's been a little bit of a rally there. All in all, I think we talked about ICE. I think Andrew Marshall was the one who brought this up. ICE, 30% from that little relative bottom. It's still further down from its top, and not that much. It's only 14% down from its recent peak. So no, I haven't been paying attention to OTCM really, but I don't like to sell unless I believe it's like undebatably overvalued, which that's easier said than done. It's like, because there's no like, I don't have like a step-by-step process for you to tell you, you should sell when this happens. I mean, I wish I did, because then I would use that. But yeah, I don't have like a list to go down and say, if these things happen, I automatically sell. It's like really an art form. And more than often than not, I don't like to sell my best ideas. I like to let them ride. I don't like to trim the hedges. So with Meta, I'll say this, like if tomorrow they offered like $1,000 a share, man, like, I don't know, that'd be very tough. And everything that I currently know about the company and all my projections are still the same. And then someone offered me $1,000 a share for each share in my position. I'd probably take that. Okay, like that's, I think, egregiously expensive. But even at like $300 a share, everything I know, what's possible, I'm not looking to really sell. There's a joke in the community that when it reaches $400 a share, I'm going to retire, which, who knows? Maybe I do. I don't think I'm going to retire, but it's just funny to talk about that. Okay, so if inflation... we have someone, I just saw your comment, Moxie. I do commercial real estate, but I focus on retail leasing. There you go. So you probably have insight into that part of the commercial real estate. So focus on retail leasing, so the retail space of commercial real estate. How's that doing? If inflation is actually stabilized for the rest of the year, any interesting plays you have in mind to make broad sectors broad sectors of interest. So if inflation teeters out, what I'm thinking about is potentially kind of capturing those cost plus inflation stocks. So what I'm referring to with that, sorry, I got a missed call here. All right, what I'm referring to with that is some of the industrial names that really suffered from the cost push inflation and their inability to pass those costs on to their end customer base. So that kind of changing hands or reversing there could be interesting. So I'm thinking about right, we're getting into that trough potentially of their demand. Thinking about the chemical producers, kind of getting back into those, really focusing on those a bit. Also, hey, honestly, not to say it again, but like some of these retailers like Dollar General, because that's one of the concerns they've been having is pushing on those costs onto their customers. It's kind of limited right now. So if we start to see inflation, broadly speaking, come down for the rest of the year and so on, which that's what the bond market's been kind of predicting for a while. And now everyone's like, oh, wow, it's happening. But that's another one of kind of like So correct, due to regulation, A class is doing well in AYC. Boom, there we go. Thank you for confirming my biases or confirming my point there. Alexander, I think, is better than KRC. No, mainly life science, also really discounted because of the office REIT stigma. Okay, so yes, but the thing is Kilroy has a diversification discount. So they do a lot of everything. They're like a master of none. They do retail, residential, and office, a lot of office. So the thing they're also doing life science. And I think Alexandria has done great and all. Just any chinks to the story will harm them. I think they're set up pretty well to perform well from a share price perspective. Again, also kind of trading at relative discounts. If you look across the board, REITs are trading at historical discounts. So I maintain or reiterate my point. 2023 has been. It's still kind of, but it was much better before. Time to accumulate REITs. And REITs have historically performed very well. It just really depends on what is your accumulation, and kind of also like what property type you're really discussing, because hotel REITs I think have been really plagued forever. I can't recall really, aside from that one, you almost have to be like, it just depends on when you bought. You have to pretty much buy them at really opportune times to make money there. I can't think of a single hotel REIT that you bought and held and you just did really well and just compounded like crazy. I can't really tell, or I can't really remember. Are you smoking something heating? Oh no. Also thoughts on legal in general, Legion, London Stock Exchange. Oh, okay. So I think I'm not interested in those stocks really, but we discussed that in the group the other day, and yeah, I think they're interesting. I think the companies that focus on these publicly traded legal companies, they're interesting, but I just don't understand, they're not as predictable for me. I can't really get around those, so I tend to avoid that. How much knows his stuff? I'm going to watch his stuff more often. Oh, thank you. Well, welcome to the community, Moxie. Don Eladio HD is about to get out of Miami quick fast, faked his own death. Oh, you're talking. Yeah. For anyone who's new to the community, the members, I don't know if that's from a show or something, but you guys call me Don Eladio a lot. I don't know. That's probably from a show. Hey, Swag Piggy Fig, how you doing, man? Okay, so did you do a write-up on HQI? Recommend checking it out. Oh, did I read your write-up? No. Okay. Okay, I'm gonna write that down to read into that one. Okay. All right, so I'm gonna read that article. What's the difference between FFO and AFFO? So FFO, adjusted funds from operation, and adjusted funds from operation. So AFFO takes into account the rental increases. FFO does not, but FFO and AFFO are both popular forms to evaluate a REIT or a real estate deal, but REITs, we're talking about publicly traded instruments. They are the closest thing we can get to to cash flow for the business, what we're doing is we're basically taking out all non-cash expenses like depreciation, et cetera. But adjusted funds from operation it can be played around with a lot. So for example, there are multiple forms to calculate AFFO because it's an adjusted form of the measure. So you can kind of stick to FFO, and then if you want to kind of take into account the AFFO, figure out how they're presenting to you the AFFO, because I'm 99% or 90, let's call it 90% sure there's multiple iterations of AFFO. Some of them, for example, are taking into account the rental increases or projected rental increases into that equation. So that's kind of I'm trying to remember what another one is, but I tend to use FFO. There are occasions where I'll use AFFO either from the actual REIT itself. They might provide it. I might get an analyst's take on it, or I might calculate it myself. So I can use FFO in place of free cash flow for DCF. Yeah, you could do that. Yes. Just make sure that your way of getting to that is correct and proper. What about forward? I love that. That's a good joke. OSTK, Overstock, specifically after it acquires Bed Bath & Beyond brand and other intellectual property. Well, Overstock, I had it back in the day as a speculation, so it was a very tiny position. If you guys have been with the channel for a while, you might recall that. But I don't. The reason why I had it as a speculation was it was kind of my way into crypto. I think it was like the least degen investment you could have possibly made into not crypto but blockchain, because of all the other side investments that they had. You had a business on top of that, but for me as a speculation play, it kind of got. I didn't see them execute on those things as much as I would have liked, and I exited the position. I believe I exited at a loss on that one. I believe I did. Sorry, I did see your question on CVS. I will get to CVS in a second. But yeah, Overstock, don't really have a positive or negative opinion on them acquiring Bed Bath & Beyond IP. Let's see. CVS is in the gutter. When are you going to pick it up? So I took a look at CVS. It was asked in one of the comments for the private live streams. And when I took a look at it, I'll say from just the numbers perspective, it looks extremely cheap. So you don't really have to project out much growth into the future at all, like very minimal growth whatsoever. And even then, like you get some pretty impressive returns. So basically, right now, I have to figure out why. Why is it so cheap? And there's a couple working theories. One being the pharmaceutical retail side of their business is very ugly and undesired, kind of like Walgreens. So operating margins there are declining. And as operating margins decline, the market's going to put a lower and lower multiple to those operating margins. Then second working theory is, well, you had the insurance dilemma, right, with a lot of these other insurance cos having a little bit of a scare. From following a strong performance in 2022, we can get into why insurance did really well in 2022. I'm pretty sure I have videos on why that was. Our insurance plays did well. Well, insurance play did well. But that's kind of waned off. And so there's also, let's call it a lower quality health insurance business. Like, let's compare it to like the top dog, United Health versus Aetna. That's not even comparable. But, there's also a potential discount for complexity. We call it the complexity discount. You have multiple businesses all under one package, and people can't really get. Fabio's bricks look way more real than Amit's. No, these are real bricks. Look, this is a legit brick. I don't have to punch it or something. No, these are real bricks. It's not paper. Maybe I have to let me see. Is it? Yeah, I don't know. You can see I'm going out after all this effort. You can see my middle finger, like the dust on it. But anyways, punch it to prove it's real. Hold on. Let me get my sledgehammer. Let me just break that. No. Fabio was flipping us off. Yeah. Yeah, that was what I wanted to do. I secretly hate all of you. No, I'm kidding. But anyways, yeah, CVS extremely cheap. All right, I'm gonna have to start the process of wrapping up just because I am getting like a message a lot. All right, hold on. Yes, finishing up. Okay, I'm getting called right now. All right. Anyways, so 24-hour live stream. No. Today is not the day. Is that? It's a green screen. No. Okay, so I do have I used to have the green screen up. Now I don't use a green screen because I have a legit brick wall. But thoughts on INTC, INTV2 strategies. So the thing is, okay, so Intel, I do have a small position. Intel. And then I sold that small position, but I did have the small position in Intel. I think that Intel has a lot to prove, but it's pretty promising. Okay, I think that they have the opportunity to actually turn things around, and if they do, it's pretty cheap. Okay, so it's not its price. By the way, congratulations to all of you that bought the semis, because like you did well. I sold too early on the semis. I sold way too early. I did not capture any of those gains. I should have kept my AMD. I don't know if Qualcomm. I don't think Qualcomm did that good, but I had AMD. It sold that way too early. They were small. Like they wouldn't have made a big dent, but yeah. I'm at Rick's right now. Hey Jake, how you doing, Jake? You're at Rick's right now? Oh man. All right. So you got to support my business. Make sure that my employees are doing a good job. They're working hard. Treat them right, Jake. No, I'm just kidding. She's my favorite. Oh my God, Jake. No. Probably should meet Diamond. No, Jake. Oh, this is funny. Carl, if you don't know, look up Rick stock. He's referring to Rick stock. Egypt is awesome. Oh my gosh. Okay, guys. Oh, this is turning into something. Why did you sell semis? Okay, so Dre Inc. I sold semis because one, they were too small within the portfolio, and to be fair, I didn't foresee there was a bit of a rally in them, and I didn't foresee the AI craze. Had I known this AI craze was coming, obviously I would have kept it, but I didn't know that was coming. I benefited from the AI craze in other ways, but yeah, I didn't benefit from it in the semis. But the semis, again, like the benefit would have been minimal. Like it wasn't a large investment, large enough to move the needle. Current price of INTC is not factoring in IDM 2.0. I feel like the downside is so limited. No, I agree with you, B. Ross. I agree with you. So like the thing is, I think that Intel of the semis has experienced the least rally, the least optimism rally. And the setup is nice. It's just execution. They execute, great. Boom. Good to go. Let's see. I have an eye on TGT if it keeps dropping. Hey, another retail. Like the thing with TGT though, TGT is going to, again, they're that more expensive option. They're the Walmart, but more expensive. And you shop at Target knowing that Walmart exists and you're paying more because you want that better ambiance. Maybe it's more convenient. I don't know. So thanks for the transparency. No problem. That's the point of these live streams. You ask a question, I answer. Sometimes it's like there's too many anticipated questions. So that's why these are great, because I get right in front of you guys and you say, hey, here's my question. Here's your answer. Boom, done. Okay, so I'll answer a couple more questions and then I'll kind of close this off. Do you think Amazon, Microsoft, and Google will begin to cannibalize each other's cloud business and actually stunt growth? Well, I mean, like the thing is, the cloud business is the market's going to grow so much still into the future globally. Like, because again, these are global businesses. It's absolutely insane. And I think as the politics start to push people more towards like the United States economic influence because of what China is doing, what Russia is doing, that's going to improve the prospects for a lot of these companies. So their cloud businesses are going to get stronger and stronger and stronger and stronger. I don't see the likes of Alibaba Cloud really dominating anytime soon. There's a lot of there's a lot of trust issues with Chinese companies, and that's going to continue. How serious should you take insider trading? So the illegal kind take it very seriously. The illegal kind take that seriously. The legal kind also take it seriously from point of view of like, it might tell me how much confidence someone has. So I look for buying, not necessarily selling. Buying is a really strong indicator, selling is not, because selling could be for a number of reasons. We don't know why they could be selling. We have no idea. It could be for many, 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 many reasons why insiders are selling the stock. But there, like we know, it's a famous saying, there's only one reason to buy a stock, right? So that's why, Fabio doesn't take it too seriously, let's be honest. Oh, that's a good joke. Okay, but I don't like Verizon. But I haven't liked Verizon or AT&T for a while. I have a video on Verizon. You can hear my thoughts on that, but no, don't like it. I think what's the point? Really disgusting business, honestly. But I mean, sure, if you buy it at the right price, it could do well. I'm just not really interested in them. Nancy's husband is my broker. Well, P. Morton, your returns are probably beating Warren Buffett. Okay, Liz, last question. British American Tobacco, thinking about adding it into the... Oh, 2 more questions. Okay, no, 2 more questions. That's it. Into the retirement. 3 more questions. 3 more questions, and that is it. Okay. Thinking about adding it into the retirement account. Inside of it, I don't get taxed on div. It's really low right now. Okay, thing with BTI... Altria and all those guys is you got cash cows, reinvested dividends, perpetually hated, potentially that return can compound. So as long as you kind of pencil out that the decline in volumes isn't going to ever be that big and it's manageable, you should be good to go. That could be a good investment, okay? And your tax managed account, etc. Why is it that when I started trading options and futures, I lost? Oh, that wasn't even a question. That was a joke question, but. All right, Will P. Are you concerned about TGT's lack of investment in their online retailing? Yes. Seems like TGT needs a prime Walmart Plus equivalent to remain competitive in this space. Yeah, I mean, they'll try. The thing is, it's tough. It's a very tough business. Very cutthroat. It is very cutthroat. So I don't know how they're going to manage it, but I do have genuine concerns about Target. So... Keep the green screen. Yeah, you are. All right. I have to bloody my knuckles, and I will do it on camera. No, I'm kidding. But can you imagine if I became like super fixated on the joking doubt of people that this is a green screen or not? I guess I mean let me think of a funnier, not a funnier way, because I think the best way would be to, Well, I mean, what am I saying? If it was a green screen, I wouldn't be able to touch it, and you would see the light move. Yeah. So no. Oh, right. So, everyone, thanks Capital Mindset and everyone for the great live stream. Oh, I'm glad you guys had fun. I had a lot of fun in this live stream. I keep hoping to do more and more live streams. I will just text you my question then. Oh yeah, you can text your question, Jake. Jake has my number, and that's like a danger. Break the 4th wall, Fabio. Do it. Just punch the camera, crack the glass, reach in. I'll grab Slurpees, pull him in. I assume you're a dude, Slurpees, and I just get canceled for that. Fabio, punch the wall. Jake, you keep asking me to punch the wall. Take a brick out, and I love how the end of this episode is just becoming about the wall. Like it's only topics about the wall and the green screen. This is how you know we're a community of lighthearted people. You'd not be able to tell if it's a green screen since you are color. Oh, McBuddha, you're bringing up my genetic deficiencies. I feel offended, McBuddha. Now I'm gonna cancel you. Is Fabio? Oh, bruh, you figured it out. You figured it out. Actually, I am the AI that Jake has been working on. And this whole live stream was just a test. And I got all of you. The real Fabio is just kicking back. He's over there just sitting down. Yeah. All right. Anyways, so where's the executive's bathroom? Well, I don't have a green screen anymore, so I've set up, so I can't use the executive bathroom thing. Write with chalk. Oh gosh. All right. You guys are hilarious. All right. With that being said, guys, thank you guys so much for coming in today, and I will see you guys on the next one. Bye.